Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning, today the 2nd of December, and as usual we will continue to talk about the euro currency. This is the video daily research from the ForexPeaceArmy.com. Well, on the daily time frame of the euro currency we see not much price action during the previous trading session. In fact, market is forming currently side by side to inside trading sessions, so we see that really thrusting up on the decision of the larger central banks about the providing of the liquidity to the swap market. When yesterday's market has shown some inside trading sessions, since instead it stands in the inside of this thrusting up bar, and today's you can see also this in the beginning of the current day is also the shallow trading session, just right at the upper border of this, if we can call it range. Okay, so market is calling in the upward, near the upward border of that consolidation. Also, yesterday we said that daily trend has turned bullish, so that is important. And market currently stands in our area of resistance that we have discussed in the beginning of the week. So this is in fact the confluence resistance. I just do not draw the 618 resistance from that high to that low, just to keep chart as clear as possible. Also, that is the weekly pivot resistance one, it's 134.60. You can see that 3 days in a row market couldn't close above the weekly pivot resistance one. So although it has penetrated it multiple of times, currently it still stands below it. It's 134.59, 134.60 is the weekly pivot resistance one. So as the potential move on the market, since trend has turned bullish, we can't exclude proceeding right to that area of resistance. This is the next confluence resistance, 136.05, 136.24, and that is the E38 resistance from the whole swing to the downside. Well, the reaching of that area in general will not break the overall bearish context, since the 3-8 retracement after the reaching of the 100% extension target from that patch A, B, C top, 100% if you remember stands at 132.42. So market has hit it and has turned to some retracement. That is absolutely common price action, and if even market will reach the 3-8 resistance, this will not be the strategy for the overall bearish context. This context will not be broken by that move to that area. Also, you can see that daily average bot stands very close to that area, is 136.84. Now our task for today's trading session, also don't forget that today is the non-farm payrolls releases, to decide what the crucial points for the as for the bull scenario, as for the bearish scenario, and to assess risk in the right way of the potential positions in one or either direction. Let's take a look on the 4-hour time frame. What do we see here? First of all, take a look at that pattern that I have discussed yesterday. A, B, C bottom. Market accelerates right to the 100% extension, and yesterday we said that probably market could even reach that area of confluence support. Well, it will be a bit definite on the hourly time frame. This level will be a bit higher, we'll see it a bit later. But in general, the 134 area is an area of confluence support. Also, that is the 50% support to the thrusting bar to the upside, and the classical area of support. This was the resistance previously. Okay, market break it, has broken it, so this will be the support. And we said if market will reach that area, it will be not bad idea to enter, trying to enter on the long side of the market, since reaching of that area will allow you to place the tight stop, and the risk reward ratio will be significant if market will proceed to the upside. But that hasn't happened. The market just coiling with the December monthly pivot point that we have discussed yesterday and has been touched, okay, 135.09, and now is calling, as we said, in the upward border of this consolidation. Also, you can see that hourly trend, 4-hour trend currently is bullish, but unconfirmed trend is bearish. So market stands now below this red line, that's the MACD predictor, okay, but this bar hasn't been closed yet. So confirmed trend is bullish, unconfirmed is bearish. Well, what we should watch for on the 4-hour time frame. First of all, this potential butterfly butterfly sell pattern, and the crucial point for that butterfly is that low. I marked that low, but in fact this is the crucial level, since this swing down has that low as the initial swing of the butterflies, 134.14. If market will continue move to the downside and take out that low, then this butterfly will be cancelled. In this case, you should keep an eye on that confidence support. If market will break it to the downside, then probably we might say that the probability of continuation move to the downside becomes greater than the probability of continuation to the upward. Since after that strong thrusting bar to the upside, if market will hold the confidence support and the 50% support of that bar will negate this thrusting move and continue move to the downside, that will be the first signal that probably market will continue move lower. Well, so that is two levels that is very close to each other. This level is 134.20. That confidence support is 12, and that confidence support is 133.90, 134.12. In fact, you'll see it on the hourly time frames more details. But from the bullish point of view, what we have? First of all, daily trend is bullish. Second, take a look at the momentum of this upward move. You can see that each swing to the upside has the greater momentum. This is the MACD histogram that I used to take a look for on the momentum of the market. This is not the classical divergence. In fact, this is just the indicator of the strength of the market when it moves upward or downward. So here we see on that tap, that was momentum. Second tap, this momentum becomes greater. On this thrusting move, momentum also increased. So we do not see any reducing of the momentum on this upward move. So that makes the probability of the possible continuation to the upside is greater. So if it will happen and the market will continue move to the upside, there are two possible targets of that move. The nearest target is 135.55 to 127 extension of that ABCD pattern. Okay. Also that is 127 extension of that butterfly, 135.68. The 1618 extension of that butterfly stands at the same area of stronger resistance that we have discussed yesterday. That is daily confidence resistance, 136.05, 136.24. 1618 target of this potential butterfly, 136.10, and 1618 extension of that ABCD pattern, 136.35. So that area, 136, 136.30, approximately is very strong area of resistance. That will be the target. So if you are bullish, you should place stop somewhere below that confidence area of support. Your target at minimum 135.50, but very probable that it could be 136.30 area. It's right here. Okay. Also, another bullish sign is that market accelerates right to the 100% extension of that move, from 618 to 100%. When it has happened, usually market proceeds to at least 127 extension. So currently, probably it's not very good risk-reward ratio, at least to nearest target. But if market will proceed a bit lower, maybe you could find this point to enter the better price. Well, but this is choice is up to you how you will manage your trade. Well, my task is to show you the potential scenarios and what particular levels we have to keep an eye on during the today trading session. Now, on the hourly time frame, it's very interesting. Well, that is confidence support that I said 133.90, since the thrusting move has started right from that point, 133 sharp. Okay. So what do we have here? Here we have another butterfly. That it stands here. This is the left wing. Okay. And that could be the right wing. And the 1618 extension of that butterfly stands precisely in the area of the 127 extension of the larger butterflies, around 135.50 area. So you can see that this area of resistance becomes stronger. Also, we see some kind of the bullish dynamic pressure. Since market has turned hourly trend to bearish, you can see that price action stands below the red line, but market is forming higher lows. Retracement, move, high low again. So some pressure to the upside. Market doesn't support this bearish trend. It hasn't started any move to the downward. No acceleration to the downside. That's that I call, and that is as we treat as the bullish dynamic pair. So market has some potential, give us some hint that probably it could show some move to the upside. The minimum target of that pattern is the taking out of the previous highs, that one or maybe that one. So absolute safe target and more safe target of the potential move to the upside, of course, that's one. It's 135.50. But we can't exclude that market will proceed to that area. This is just the nearest target and the more probability that market will reach that one. Okay, so if you are bullish, we said that you should place stop somewhere below that area, because in that case market will erase this butterfly and will break down the confluence support. That will be the solid sign that probably market will proceed lower. Well, if your target is this one or that one, if you are you will have a bearish view on the market, then probably you should watch for a currently to enter is not very safe. So it's probably try to enter short partially from that area and add more and larger part from that area. The placing stop somewhere above the daily level of overbought is around 136.84. So that will be just the 20-30 pips stop. It's very tight stop. Well, or if market will break that area to the downside, this is your signal that probably you should watch for a potential signal to enter on the short side of the market. So it's some thrusting bar, and drop your time frame maybe to the 30-minute chart, maybe to the 15-minute chart. That will be your and search for the nearest retracement where you could try to enter on the short side of the market. So that's our current view on the situation. It's a bit tricky, and the release of the non-farm payrolls could add some volatility on the market. So be careful, control your risk, and wait for the clear patterns before they pull the trigger.